Hello everyone, so we're Team C, and I'm Yu Xiang, and this is my team member, Angel and Yawen. So we're gonna start. So next page, please. Okay, so we're gonna start the strategic plan. So we from the entry level and like past the from year 6 to the year 12, we always implement the focus differentiations. So I just want to mention that our market share is a little bit low. It's like 18%. But this picture is actually from like year 11. So just want to make an example. So our company is here. Yeah, it's a very little circle, and I click the company C is like the AC camera is 18% market share, and the UAV drones is like 22% market share. But our strategy is because we using the focus differentiation, so although we have like low market share, but we have like the highest price, which means we have a higher profit. So I just put the equation here is like target. We have target plans, which means we have stable market. Yeah. So just next page.
So when we had our first class and the professor talked about the globus and about the guidebook, and we had to look at it in two ways. It's a real life. We can take it as a real life business, and we can take it as a game. So what we did is the first thing we do if we want to start a business is we research about the market, and what we did, because we both are from Asia, we knew the Asian markets because we used to buy cameras and drones back in India and back in China. So we researched about the markets. We researched about the biggest players in those markets. So the biggest players were Sony, Canon, DJI. DJI was the biggest player in Latin America. So what we wanted to do is in our minds, we made a 10K report for what we wanted to do for those 6 years, and we wanted to be the first in every year, have the highest revenues, have the low cost products, no, not the low cost, have the lowest cost of goods sold. So what we did is we looked at companies like Canon, Sony, and DJI. What they did was they had the lowest market share all over the world because there were other companies, local companies from China, from India, Latin American local companies that had more market share in those market areas. So like Sony only had a market share of I think 21% in India because there are so many Indian companies and they make global cameras that Indian people buy that. So we took the same strategy, and what we wanted to do is give a product that is a feasible price, even though it's expensive than the other companies, but give out the best product that we can do. We give out the best lenses that was like 13mm, 12mm, give out the best resolutions, give out the best motion sensors, give out the best technology, advanced technologies in the drones. So what we do is we targeted a small number like many other companies do because we knew that even if we take a high market share like company we did, we wanted to make revenue from the first year. Even though it's not possible in real life but we wanted to do it in globals because every year was important to us. So what we did is we were okay with the low market share. We targeted a small group. We approached them with a unique offer that was a product with a high price from the other companies, but had all the things that were needed from the drones and from the camera. And we fulfilled the demands because if you look, we looked at the researches, all the surveys done on the companies, that the most unique thing is they need a motion sensor, they need the best lens, and they need the best resolutions. And even if it's a high price product, people will buy it.
I think we have the successful strategy. The successful strategy for the business is as there for the positive trend in year 5 to year 11 is showing groups from 0.75 to the 10.05. And also the ROE is increased and the stock price also the upward trend. So I think it's successful for the strategy.
So the second section we choose is product and marketing strategy. So I think our marketing strategy is like we put we choose like specific website, and then we have like specific supplier, which we put together, which means we can like save a lot of monies, because our strategy is like focus differentiation. So we have like fixed customers, like we have consumers. So which means and from year 6 to the year 12, what we do is like we constantly reduce marketing expense. So which means we can save a lot of cost on other terms. And so for the four piece, it's like the product, price, place, and promotion. The product what we do is like we change like several features for our like AC camera and UAV drones. Is in order to meet the need of our target groups. And for the price, it's like what we choose is depends on the consumption level of the customers. It's like we always put the highest price in North America and the lowest in Latin America. I think because I think the North American, there's a target market maybe have like a higher consumption level. Yeah. So, and then promotion for the for the place, so for place have the same strategy, which is focus the differentiations. And the promotion, for the promotion part, I already mentioned this. Like we're choosing specific platform, and we like using like same style advertising in order to save monies. Yeah. And next page, please.
So for the price, we wanted to go. We changed price every year according to the last year's performance. So with every region, what we did is we looked at the companies, what they were selling their products at, like Sony, Canon. They have every like different price for different regions. What we also did is we also looked at the regions purchasing power parity. Where let's say if a drone is selling for $500 in America, I don't think anybody would buy that same drone for $500 back in India. Even though if it's the same drone, even if it has the same quality, same advantages, nobody would buy it for $500 because when it goes over there with the exchange rate and all the taxes and all the different like government taxes, like in India, government taxes and the VAT is different because they have to pay everything on that bill. So for that reason, when we looked at Asian countries and Latin American countries, because the taxes are so high, we had to change our price. And sometimes the prices were so different that we were selling one product for $500 and we were selling one product for $380 in some regions. Because even though we had to cut our price, but we maintained that target group because we were loyal to them, they were loyal to us. That even though we sold that product for less, made less profit, but that helped us next year when we were able to increase price, even by some amount, they still bought it because at first we gave them the product at the price that they wanted to buy at. So the other price strategy was we didn't have the highest revenues because we didn't have the highest market share. And even though we had the highest prices, company B and company A had the highest revenues than us, but we had the lowest cost of production. We had the lowest cost that went into R&D, and that helped us gain more revenue, and that helped us gain more EPS, more ROI, because the cost we built our product at and the product that we sent into the market, that helped us earn revenue and gain that profit margin.
For our market strategy, for the net revenue, there's substantial growth in the net revenue for both the AC camera and the UAV drone. For the unit sales have increased all the regions, almost the North America beginning the largest market. For the market share, in our market, both products have maintained a strong market share. About AC camera, most about 20%, and the UAV drops staying about 22%.
Okay, so the third one is like our production strategy. So our, I know because our overall strategy is focused differentiation. So I just make an arrow here. So which means we have like limited product demand because we are not doing like broad differentiations. We don't have like many customers. We just have like our target market. So means we have like limited product demand, and which means, and also I checked the compensation and the facilities. It shows me there's no overtime, almost no overtime. Like in year 11, I remember it's like 3 or 4. Like it's just a little bit. No, almost no overtime, and we are not doing like outsourcing, and which means we have like enough productivities. Like all the workers is our workers is totally enough for to produce our products. And next page.
Yeah, it's like I talked about, like kept the cost of goods sold low, and for our production strategy, what we did was, like Jimmy talked about no overtime. Like from my personal experiences, I've worked with companies, I've done internships. Whenever I had to do overtime, I didn't work fully prepared, and my mind was not mentally prepared to be the most efficient and like effective for my job, because in my mind I was like, why would I work for this company who just keeps on giving me overtime even if I'm not getting the incentives? Like Professor said, if I receive a paycheck which is 10% less, why would I work with that same efficiency, same effectiveness? So that's what we wanted to do, because we wanted to make our production efficient by, and that helped us reduce our costs because we didn't have to expand our facilities that much. We didn't have to get in more labor to produce our products, because we didn't have to increase our market share, because our revenues was very helpful for us, and most of the time we were bootstrapped, because that's why in future, like in the next slides, you'll see that we didn't get that much debt, and we worked on our equity, we bootstrapped our capital. The more revenue we got, the more money we put back into our businesses. That helped us not give the overtime to labor, not hire more workers to do the job, because like he said, we didn't have that much demand. The stable market that we had helped us grow.
And with production strategies specific for the chemical R&D of expense per the $85 million with the significant ongoing investment in product development. And the second is the facilitated expansions about the business growth and the expense with the addition of the 300 new spaces and 219 workstations. Third, about production cost, is efficiencies invest in low overtime labor, and the training cost results in total production cost of approximately $135 million.
So the fourth one is the compensation and labor strategy. So for this one, I still wanna mention the third question. So the third one, I already mentioned that we have low production demand. So which means we need like low technology the requirements. So I remember the AC camera or from the compensation and facilities section, we choose like we give the same wage from almost the same wage from year 6 to year 12, and the attendance bonus is like 50. It's not higher, but we are not changed a lot from the AC camera, so I just give them like almost the same wage for the AC camera workers, and it's also the low cost on training. So because we didn't change a lot from the AC cameras features, so we're just doing like $1,000 for the training on AC camera workers. But for the UAV drones, our product quality is constantly improving. So which means I have to put more money on the training for the UAV workers, and also increase every year their wage, and also increase a little bit about the attendance bonus. So it's to like boost them. And next page.
Yes, so these are like for UAV drone workforce compensation. Base wage was higher than industry average for all the years. Assembly quality incentives were higher than industry average. The reason why we wanted to give assembly quality incentive was the same reason that I talked about in the previous slide, that the major thing about workforce and labor is to keep them happy. The more efficient they are, the more efficient the company will be. And even though the base wage could be lower, like all of us people at restaurants, they work for tips. Most of the money they get is from tips. Incentives, the more incentive we give them, the more effective and efficient like the workers would be. And the attendance bonus, even though the attendance bonus was lower than industry average, because Jimmy said we didn't have that demand, even though UAV drone was increasing, the market share in that was increasing, but still we didn't have a market share that was as equal to other companies. So we didn't have to produce that much of the quantity. So even though attendance bonus was lower than industry average, the other two were making up the gap to make the labor happy, to make the workers happy, so that they can be efficient.
We have with the products, for the product assembly team, like the with PAT high with 27553 per year, and the total number of the employee is 861. It makes the productivity is high. It's busy on the salary increase, providing greater the incentive, and addition attendance bonds, and the bonds to the reduced variety command.
Okay, so the number 5 is corporate citizenship strategy. So for this part, I think this part is more about our image rating. So from year 6, I remember that is we always promote the green measures, and we spend money on renewable energy program. But we changed that from year 9. It's like we are improve the working conditions, and I just want to mention that our image rating is always higher than investors' expectation. But I just want to mention that we are not doing, from year 6 to year 12, we're not doing the charity. So I think that's the reason why we are like our image rating is always like the average is like 80, and not like 82, 85, something like that. So next page.
So I'll add to what Jimmy said. The reason we didn't like, somewhat it was intentional, because if you look at the companies in real life, what they do is customers associate companies nowadays if the companies are carbon neutral, if there's any carbon footprint that their products are leaving behind. So what we did is every year we kept on giving money, provided dollars per unit sold to renewable energy program, so that even like we didn't want our credit rating, image rating to be lower than investors' expectations. So this helped us to keep it over that. We wanted to go ahead with the game, but we knew that even if our image rating was not that high, we would survive and we would earn profits every year no matter what happens, because of what product we provide. Because for us the main thing was the product and the qualities of it. So that's why we kept on donating money for renewable energy program and not for other charitable donations. Not every year we did give money in some years, but not every year. But the second thing is we kept a certain level of image rating because we didn't want our market share to decrease. Even though it didn't increase that much, it was very stable, and that helped us to keep that focused differentiation strategy in works because that was our plan since the start, and this helped us. This CSR strategy helped us to go through those 6 years.
Oh, yeah, we did the environmental protection, like the reducing pollution and the results. We also did the ethical business, like the transparency and integrity, fair play, and compliance. And the employee care, like the employee welfare, and also the customer responsibility, like the providing high quality, safe products, and the service, and ensuring honest market behavior, and the customer privacy protections.
So the number 6 is our financial strategy. So this one is, I think, is the biggest unfair one for us. So I just want to talk first. So the first one is from the year 6. We are doing like a 10-year loan for $1,405,000, but we pay off in 3 years. So I think for this part, I think we actually waste our money because the 10-year loan, the interest is higher, is the highest one. So actually for our strategy, we need to like borrow a 5-year loans. That is that can save a lot of money. And second one we change is dividend. The dividend is from year 6 to year 9. We are put like a higher dividend to attract our stockholders, and from year 9 we just cut the dividend. Just try to control the cost. And the third one which we make is repurchase our stock to boost our earning, because from this one I'm gonna make an example is like Apple. So Apple is the biggest one, is one of the biggest one company to repurchase their stock. So yeah, I just want to make an example. So next one.
Yeah. So the first day that we met and we wanted to discuss what we wanted to do with the company and how we wanted to go with the capital distribution, we wanted to have a higher equity than debt. Even though we could have leveraged our debt, even though we could have taken more time in paying off our loan, but we still, that was a vision, that was a goal as a company, that we wanted more equity. And what we wanted to do is we wanted to get those revenue back into the company and become a bootstrap company in some sense, that we didn't need that much loan, even though we had less cash holdings in the last few years. And we also wanted, so the thing was like current ratio is the most, like one of the most important ratios after the liquidity rate. Like we wanted a higher than industry average. The industry average in our company is, if you look at Sony, Canon, is like 1.23, 1.25. So we wanted to keep it over 1.2, 1.25. So that's what we maintained. We maintained a debt to equity ratio of about 28 to 70%, and we maintained a current ratio of 1.36. Yeah.
Interesting.
Yeah, we take finance very seriously, like the growth and the profitability, like by achieving growth profitability metrics through increased sale, and the company is able to effectively convert revenue into the profit, and like the leverage and debit management. A high interest coverage rate indicates that the company is currently able to meet its interest payment obligations and cash flow management. The company has ample cash flow to cover its operating cost and debit. And the company also actively manage its equity structure through stock buyback. The investment and the cost control, significant investment are made in R&D and marketing, and the company is committed to product innovation and market expansion. Like asset management, we company has a healthy asset structure and a relatively high level of the cash and the account receivable. This indicates that the company have strong short-term solvency and liquidity. Like the risk management, project high warranty claim rates may also indicate a company risk profile in terms of product quality and follow-up service. Like shareholder value, a no dividend strategy may mean that the company is more focused on the reinvestment for long-term growth rather than deriving stock shareholder return in the short term.
Okay. Number 7 is our computations. So I think from year 6 to year 12, our closest competitor is company A. So AC camera is company A, and UAV drones is also company A. So why is A company? Is because I guess their market share is broad differentiations. So just wanna using the year 11's pictures. So why I choose the company A? Because from year 11, the company B is far away from us, but company A is in AC camera. Company A, we are almost in company A's market share, and also this one, where the company A is the closest one for us. So they are actually our biggest competitor. Also for the year 11, company B is already far away from us, so they are not our biggest competitor. So next page.
Yeah, so similar to Europe Africa region, company A is a competitor. And the thing with the competition is we looked at charts from year 6, year 7, year 8, year 9. Like you said, Professor, we wanted to focus at PAQ rating, but after what he said that, and we looked at the guidebook, the most we could get is 5, and after that, the most points we would get is 24. It's not about doing more. So we kept it there, even though we looked, the first thing we were worried about is the team B, like why is the PAQ rating so high and why are they so further ahead, but that PAQ rating was not affecting our performances. So at first, like we looked at different regions, North America, Europe, Latin America, Asia, so we intentionally kept it there because we wanted to get points, even though because we knew it, we were maxed out. So this is why, so the thing was like with the competition, we at first in year 6, I think we were above team B for PNQ, but like in other years we intentionally kept it below 6 and between 6 and 5 to keep it minimal, and so that we don't like we even if we maxed out, we get the most 24 points. Yeah.
Conclusion: the competitive advantage, like the market positioning and technology, innovation, and some global market share, like the effective cost control strategy, and the strong financial position and multi-channel sales strategy.
So number 8 is strategy evolution. So I already mentioned that our strategy is always from year 6 to year 12 is always the focus on differentiations, and so after year 12 we want to do is expand our market share and try best value strategy maybe or broad differentiations. We're gonna do like this keep improving our product features and maybe just reduce a little bit our price and also try to expand the market. And yeah, that's what I mentioned is like enhance product competitiveness is our like core value. So next page.
Yeah. So even though strategic value, we want to change our strategy with, we want to try different strategies, but the most appropriate it seems to be broad differentiation. But we still want to keep our core values the same. We want to keep our cost low so that we can have more profit. We still want to keep, and we still want to change prices, because I think that was the best thing that we did for those 6 years, because even we changed it for, we changed the price for between like $10 to $15, that affected our sales, and that affected our sales in different regions, because most of the times, even if it didn't affect our sales in the North American regions, it did affect our sales in the Asian region and the Latin American region, because the major quality, like major customer thinking there is, they're more focused on price than the product itself. So if they're getting the best price for that product, they'll go for it. So that's why, and we have seen in those 6 years that we haven't increased our market share that much. So if we are trying to change our strategy to broad differentiation, increasing our market share is very important, and I think that's what we try to do in those next 2 years.
From the initial marketing and the product construction to a comprehensive evaluation, focus on the technological innovation, market expansion, sales channel optimization, cost efficiency, and the financial and risk management.
So number 9 is conclusion. So the result is very congratulations for us. Always be the number 1. So without year 11, year 12, right? So always be the number 1. So I think we have the right direction, and we have choose the right strategy for us. And do over. So if we're gonna redo something, I think I'm gonna put some money in charity and to improve our company's reputation, and also improve do a lot of improving our products to increase our image rating. That is impossible for us because the image rating we always been the lowest one. So that is our disadvantages. So number 10 is lessons learned. So number 1 is I just understand the real market competitions, and also I know the importance of the strategy. What we choose is pretty important for us because you have to think about the price, you have to think about the market share and other things. And third one is we have to I just know that running a business is really difficult for us, and just always remember we have to understand our core competences. This is very important things in next page.
Yeah. So the lesson that I learned in this was always stay true to the business strategy, because there were so many times that I wanted to change my business strategy but like I did my research, like I talked to my teammates that if we started our business with focus differentiation, there would be some way that we could change something that our strategy that we chose would work. And that's the main thing that I learned, that I have to be more resilient to myself, that I make those decisions, that if I'm making a decision that might be right, even if I think that it isn't, and is make changes to ensure stability. Like, so I'm like, we can't just do the same things all over and over again. That like Albert Einstein said that insanity is doing the same thing all and over again and expecting a different result. So we made changes because even though, like Jamie said, we knew like in year 7, year 8, year 9 that we weren't beating other companies in image rating. So we tried changing other things so that we can beat them in overall expectation, in investor expectations, and between the class. So that's why we got the higher scores, because we understood that we won't be beating him in that one section, even though there are 5 other sections. So we made sure that we beat them in other 4 sections. And the thing is, the lesson learned was before the start of the project and before I even entered the financial class, that I always thought that more revenue the company earns, they'll be more profitable. But this, yeah.
Not true at all.
Yeah. Before that, I knew, I thought that. So before this, like the moment the year 6 happened, I saw the most revenues. I was like, we were the 3rd last, and I was about to grab. Like, I want the A grade. So then I went to the whole section. I saw our cost of goods sold. That was the lowest, and then I saw a net profit. We had the highest net profit. So that made me think that, yeah, having most revenues doesn't mean having the most profitability.
Okay, talk about learn something. The importance of strategic planning, financial management, marketing, positioning, and risk control in the successful operation of a business. By studying the example of company C, other companies and the manager can learn how to make strategy adjustment and a decision in a dynamically changing market environment.
So this is like some overall perspective of our. Wait a minute, I'm not finished. So our overall perspective for our like this is net revenue looks fantastic. Yeah, always increased. And next one. So next one is I think is EPS. EPS is also always increased. I think it's good. And also third one is I think is ROE. So third one is ROE. Just from the year 9 it's still growth, but year 10, year 11 just a little bit decreased. But I think it's not important. So just next page. So credit rating always we start like year 6, so we begin already be the A minus. So it's A minus A or A minus and also A. So I think the credit rating is still good. So next one is stock price. Yeah, always grow. It looks good. Next one. Image rating. So image rating is our disadvantages. So it's from year 6 is like I remember it's like 78, and in year 12 I remember it's 80. So the average score is 80. So it's not higher than other 2 companies. So image rating, I think we have to do more things to improve that. So next one. Yeah, just thank you. Yeah.